Hello once again, and we now go into our second session of the morning, and a very interesting session we had earlier with Dr. Robin Sherwin, and we now take a bit of a deep dive into some of the, I would say, maybe microeconomic questions, although I guess they always have macro implications, and we're going to focus on the real economy and primarily, I guess, in the agricultural space with a brief focus also on the wine industry, which is one of our significant agro exports in South Africa. And we'll also then have a chance to take a look at the tourism, leisure and hospitality industry, which has also been hard hit by the restrictions on mobility and some of the challenges that have been brought about by COVID-19. But before we start, just allow me the opportunity to introduce three of my guests this morning for this discussion on the real economy. We've got Wandile Sihlobo, who's going to be giving us the first remarks. Wandile is a chief economist at the Agricultural Business Chamber in South Africa, AGBIZ. He's a commissioner at the Gtac, which is the International Trade Administration Commission of South Africa. He's also the author of Finding Common Ground, Land, Equity and Agriculture, and also a member of the Presidential Economic Advisory Council. We also have Dr. Tracy Davids, who's established in agricultural market analysis with a focus on commodity market modeling, formation, and the spatial price relationships. She has an extensive record of publishing, international collaboration, contributes regularly to market outlook publications and a significant number of conferences as well. And we look forward to some of her remarks on the wine industry and how it's been impacted by COVID-19. And we'll also be joined by Dr. Unathi Enama, who's a South African author and a lecturer from my home province of the Eastern Cape, and not too far from where I am from and where I am now. He's from Xofimvaba, and he's currently a tourism professor at the Department of Tourism Management at TUT, Tshwane University of Technology. And he's somebody who has very fascinating set of research interests in pro-poor tourism and sustainable development, and he'll be telling us a lot more about some of the impacts and implications that he has seen that have been brought about by COVID-19 on this very critical sector for the South African economy. So that being said, I want to maybe just remind people before I call up Ujola to remind us all, we've got the polls up, and so please feel free to fill out those polls. We also have in the reception area our survey. Today is the last day of the winter school, so we'd really encourage all of us to fill out that survey. It's a critical piece of information that helps the planners and the organizers of the winter school to continuously improve the experience that all of us have with this public economics winter school. So that being said, let me call up Ujola Wandile Sihlobo. Give us, I guess, a brief overview of some of the issues in the agricultural space and the implications of COVID-19 there. Jola, the platform is yours, my brother.
Yeah, Engos Glasibe, good morning to all the colleagues that are joining online. I'm going to try just to share a few slides that I will be using. Yeah, good morning again, colleagues. The remarks I will focus on this morning draws from a paper that we wrote with Professor Johan Kirsten and Prof. Freddie Meyer at Stellenbosch, and also Tracy, who's on the panel with us, and also Tinashe Kapuya from Agra. And we wrote this paper particularly last year, and it was a period where primary agriculture, not the food industry at large, but primary agriculture was doing relatively well. We were seeing some bit of growth, even though a number of industries were already coming under pressure. And you all know from the statistics of last year that South Africa's agriculture grew by roughly around about 13.1%. And if you were to zoom in down and say where was growth coming from within primary agriculture in South Africa, it was pretty much spread across all of the major subsectors. You think about the field crops, for example, that's where you have maize, sugar, and the likes. We were seeing some good numbers on that side. In the horticulture space, which is the fruits and the vegetables, we're also seeing good performance. And to an extent also in the livestock, we were seeing some good performance. So it was at a broader level, relatively a good year for agriculture. But obviously, the picture wasn't like as uniform as that, because if you were to dive down now and enter even the sector now that the subsector that Tracy will be speaking about, the picture was somewhat slightly different from what we were seeing in the broader picture. And I guess one of the key things that assisted in the good performance of primary agriculture, firstly, I mean, the good rainfalls that we saw last year. And in addition to that, commodity prices were relatively attractive. Farmers having incentivized by that, they increased their plantings. So there was that awesome activity. But then as the COVID hits, the first few cases intensify and we go on the lockdown at the early start of last year, we all know that agriculture, designated as one of the essential sectors, that placed us in a relatively better path than many sectors of the economy. And I think in a large part that assisted us in carrying through a number of some of the activities that we saw in agriculture. So that's really the basis under which we were operating on. That assisted us. It's the regulation, but also working with the fundamentals that we already had. And I guess that opening up and assisting us to be operational was also fantastic in a sense that we are an export-oriented agricultural sector in South Africa. If one likes, you look in the value terms, you could make an argument that probably half of what we produce in value terms goes to the export markets. That meant that now agriculture did not have to really be open on regulation in as far as operation in the farms, but also really allow activity in transporting the agricultural products. At the start of the lockdown, there were obviously misunderstanding in the regulations. Some of the products were not allowed to be moved. There was a sense amongst those who had to implement the rules on the ground that they felt that, you know, agriculture is only just something that is related to food. But when some of the other products had to be moved around the country, either products that are being used in the value chains, they were placing all sorts of hindrance. But I think after industry and government clarified those regulations that allowed the transportation of all goods across the value chain of agriculture to be moved around the country and also to the ports. And as a result of that, I mean, if you look at the export activity of last year, while things were tough, while global supply chains were pretty much hard hit, we managed to achieve the second highest level of exports in the history of the country. That's just around about $10.2 billion of the exports. And the chart on the left-hand side on your screen, that maroon bar speaks to just that. The record level was in 2018. And even if you were to look at the markets or the geographies at which we send a number of our products, we pretty much maintained or saw a good demand across all of the markets that we typically export to. For example, we have 40% of our products going into the African continent. That continued, Europe, that continued. And I guess part of the demand is obviously people sitting at home and cooking for themselves, and also the composition of the products that we export from South Africa, having citrus, for example, being one of the large products of that, and the vitamins and the healthy eating that everybody was looking for. That assisted us in as far as the demand for products, working with an environment where the regulators and the industry had managed to find some common ground about how to operate in the sector. And I think that's what gave us that good landing base. But also there were interventions that were made during this session, but during that period, by coming from the government and various institutions. If you start, for example, in the Reserve Bank, the interest rate cut that happened assisted a sector a great deal, because we are a sector that is somewhat heavily indebted. And that reduction in interest rates last year gave the farmers a good relief in as far as the debt servicing cost. Our estimates, for example, are pointing the savings at around about 6 billion rands within the agricultural sector. And that assisted, that's a good boost. But the Department of Agriculture also came with a more targeted intervention of providing some support of around about 1.2 billion rands within the agricultural sector. And during that process, obviously having selected certain subsectors to focus on, but also size of the farmers that they decided that they will focus on. But that's where I think that calibrating policy was perhaps maybe not done properly, in a sense that, as I said in the previous slides, at a broad level, the agricultural sector was doing relatively well. Now, saying you are putting policy support in terms of financing to the poultry industry, livestock and vegetables, those were sectors that were actually doing relatively well. Perhaps they shouldn't have been supported. That's the criticism that was central to our paper that we wrote on this matter. And in fact, our understanding of how the virus, COVID-19 disruption affected this agricultural sector were in three pathways. The first pathway being the virus on itself and the disruption it caused. And in our view and our judgment upon looking at the things was that the virus per se had minimal disruption in the agricultural sector. And on a second point, though, or second pathway, was the virus impact on the confidence in the sector, business and consumer confidence. There was an impact there because we did see the sales being affected, particularly in the first few months after having gone into lockdown. But where the central impact, I think it was largely on, it was how the regulations were put in place. And this is the point that Tracy will be speaking on just after me on that, because the industries that were affected by the regulations and how they were calibrated are the ones that we have highlighted. You see them in your screen: the floriculture, wool industry, mohair, wine, ostrich, and the others. And I think upon all of those sectors, if you were to make the assessment, wine industry probably is the one that was hardest hit, and that's what Tracy will focus on, and the tobacco industry to an extent, because some of the other subsectors, as the year progressed, we began to see a reversal of some of the regulations that had caused the disruption. And in closing, let me just show two more slides. And the first one really looking on the grains and the oils and the oil seeds. If you look at the major grains that we produce in the country, we've mapped this on various stages, starting from March, going into level 4, and obviously when we were level 1 around about June, going into the beginning of this year, on what the impact of COVID was like in various crops or industries in agriculture. And in the surveys we did with the number of major producers in this space, it basically ended up to what you are seeing on the screen, that there was a minimal disruption in the ports and everywhere in various stages of lockdown. But if you recall in my earlier slides, that the exports were solid last year, which means that those were pretty much more of a temporary blip to an extent. But obviously the barley industry having affected because the beer industry was closed down for a particular period, then that did hit the farmers, particularly our colleagues in the Western Cape that are heavily in that industry. And we will see the impact of that, for example, in what they planted this year, and probably it will still be felt in the next season. That's how in the grains industry, but everybody else, I think, managed to thrive relatively well. But if you switch to the second last slide on the horticulture space, and I think that's where then the impact you begin to see. I mean, if you were to stretch the slide, obviously beyond March 2021, that red section of the wine industry probably would have come up, and I'll leave that point though to Tracy to dive in. But the key takeaway from here is that at the start of the lockdown, the temporary closure of certain fresh produce markets in the country, closure of the informal businesses, either it's the hawkers across the towns and everything else that was happening, saying everybody should be home and let's clean out the streets, rightly so in containing the virus, but those had an impact in all of their colleagues that participate in that space, because we all know that fruit and vegetable are largely really supporting the small and medium and informal businesses, and closure and the disruptions on those and the limited movements across the country did have an impact even back now onto the farming businesses. And that's what we really tried to show in this particular slide. And now as my closing slide, I mean, in the livestock industry, I talked about the wool and the mohair in the previous slides, and that was to highlight really the impact while we were on stage 5, level 5 of the lockdown, and also within the level 4. But as the year progressed, we began to see regulations change and the impact being minimal onto that, which is why I was making the statement that perhaps wine as well as tobacco industry were the ones that were hard hit. But overall, agriculture in South Africa putting wine industry in isolation, I would say that we performed relatively well. I mean, even this year, we will continue in that good momentum. The estimates from my colleagues at BFEP are looking at a growth of about 7% on a year-on-year basis this year, even though we are coming from an already higher base of about 13.1. That's seasonally adjusted and annualized, of course. So it's a relatively good period for agriculture, even though we are in pandemic. But regulations that were put in place did have an impact. And the money, that 1.2 billion that went to certain farmers, should have gone perhaps maybe in supporting the wine industry. But policymakers chose more of a developmental angle rather than targeting the impact of the pandemic. Let me stop there, Gtac. Thank you so very much.
Ngozi Chola, thank you very much for those remarks. And I think, what for me comes out quite strongly from that particular discussion is, some of the subsectors you're talking about are very labor-intensive forms of work. I mean, if I think about horticulture and you compare that maybe to animal husbandry, you're probably getting more jobs, per square meter or even per, I guess, rand invested in that space than maybe what you'd be getting in other spaces as well. But we'll continue on this vein and potentially talk about something that I know many people on this call like, and that is wine, which certainly hasn't had a good showing in the last while due to some of the restrictions on the sale of liquor. But Dr. Tracy Davids certainly knows much more about that than I do. And she joins us now to share with us some of her reflections on what picture we get from the wine industry and how it's responded to the shock brought about by COVID-19. Dr. Tracy, the platform is yours.
Thank you very much. Thank you very much also, Wandile, for that great roundup of the broader agricultural effects. As indicated, I will focus a little bit more specifically now on a single industry, but arguably one of the industries that was the hardest hit. So just talking a little bit, drawing also heavily on a paper that we've recently submitted for publication in Agricon, but that really focused on determining the impact of these various rounds of interventions and sales restrictions on wine production in particular. So very much at a primary level, very much focused on a single industry. Just a little bit of background. I think Wandile has mentioned some of this, but I think it's important to note, without going into all the details, just the sort of timeline related to the pandemic and how that influenced the wine industry. So obviously, when the initial lockdown was imposed in March last year, it was very broad-based. So it was quite a quick period of having to decide and having to specify all the essential services and what all is included in that. So in that first round of ban, alcohol sales obviously were stopped completely. The production of alcohol for industrial use carried on, things like other alcoholic products. But the wine industry in particular was almost left out in that first round, in the sense that they were nearing the end of their harvesting period. So there, a lot of role players stepped in with an urgent appeal to government to at least allow that harvesting process to continue. That they did, and it was specified just prior to the level 5 regulations coming into play. So the harvest process could at least continue, obviously being a perishable product, the grapes. But sales were still banned, and importantly also the transport. So the producers then couldn't export their wine. So sales were stopped essentially completely. Then on the 7th of April, so shortly after that, there was a concession made to transport the product for export, so that exports could carry on. But then just almost 10 days later, it was stopped again. So obviously there were concerns related to security, etc. But the transport of wine was stopped again. So then exports went from being banned to being able to go again to being banned again, which obviously created a lot of uncertainty. And this is not something that you want in your export markets, where South Africa has a very good reputation of supplying consistently a good quality product. And once that reputation gets damaged, it's obviously a longer period to get that restored. So then we had various rounds. We had again a ban imposed in June, was later removed in July. These sort of levels went with the waves of COVID infection. So I don't think we need to go through all the details. All these further ones essentially related to the domestic market. So either outright bans or at different times just restrictions on sales periods. So typically from weekday weekdays Monday to Thursday from 10 through to 6. Latest one, of course, is just recently removed. So we had it starting again in June, and by end of July, we've gone back to a level 3 where we can sell at retail outlets only through those weekday periods, and on-site consumption can carry on again. So the big question was, how do you quantify the impact of this? So BFAP, we were in the privileged position that we had previously developed a partial equilibrium modeling framework, which we use annually to produce the outlook for the wine sector. So we could use this at fairly short notice to try to quantify the impacts of some of these industries. Just a little bit of background on that. By its nature, the partial equilibrium modeling framework focuses on a single sector, and what it does essentially it equates total supply and total demand within that sector. In this case, solving for a price. So what we've got in the model on the supply side, we start at the primary sector. So we model the area under vines and also yields, which then gives us grape production. That then goes into different market outlets. So you've got your grape juice and concentrates, your non-alcoholic use. You've got wine going to brandy, distilling purposes, and then still wine, your drinking wine, which is obviously the big one. Also accounts for imports and beginning stocks, which gives us the total supply. And then on the demand side, we've got domestic sales disaggregated into 5 pricing levels, so different price brackets from low priced all the way through to ultra premium wine. And we do that just to account for the fact that you're looking at different consumers who respond because of their income levels, also tend to respond differently to changes in prices and income. Then we've got sparkling, fortified, and brandy also accounted for separately. Then we also look as the share of total demand then at exports. That we disaggregate into white and red. And for each of those, we model very specific countries as well as a rest of the world component. So that then obviously looks also at your typical demand side factors in those countries, as well as relative prices, exchange rates, etc. in South Africa versus other suppliers. Then we've also got ending stocks. And then in solving all these various equations together, we get a solution or equilibrium solution where total supply equals total demand gives at a specific bulk wine price. And this bulk wine price is then transmitted through to retail prices as per the various market segments, as well as your brandy, distilling wine, and grape juice segments. So this is the framework we relied on. We used it on various occasions. Initially, when the first bans were imposed, to try and quantify the possible impact that it could have on sales and exports, on profitability in the sector, on reinvestment. Obviously, that goes along with multiple assumptions. So, you're trying to simulate an impact of a ban, which you're not even sure how long it will last. So there were various rounds of redoing it as information became clearer. As we learned more, we put that into the modeling framework and all the while comparing possible future outcomes to the baseline, which is basically just what we had going forward based on a set of macroeconomic assumptions, but not accounting for the various restrictions on sales. The last one that we did in the beginning of this year, and which is basically the focus of today's discussion, we actually used the model in a backwards context. So we simulated an alternative outcome for 2020. Now that we have the actual data, we could simulate 2020, imposing the actual macroeconomic outcomes. So in a sense, accounting for that, but then noting the difference between what our simulation shows under this weaker macroeconomic environment and what actually happened, and then we attribute that to the various rounds of sales restrictions that were imposed. So obviously the tricky thing here is you can look at year-on-year movements, but a big part of that is also what happened in the macroeconomy and your consumer environment and your spending power, etc. So when you do this, obviously you need to understand it within the context of the broader market situation. So just looking at where the industry finds itself and why. So wine, I think, has been noted is very important in our agricultural context. If you look at the agriculture and food grouping, if you can call it that, all agriculture and food products, it's the biggest contributor to exports after citrus. And that's important because only about half of our wine actually gets exported. The rest is sold domestically. But even having said that, it's still a major contributor to exports. It's been mentioned that it's a high employer. So there's a high employment multiplier. It's quite labor intensive. And then, as I said, if you look at this chart here, we've just split the demand side and the stacked bar. We've got domestic wine sales at the bottom, and then we've got exports at the top. So that shows you a roughly 50-50 split between those two markets, but each one, of course, driven by their own dynamics. So if you just look at over time where the industry found itself, when this was imposed, obviously it had grown quite strongly for many years, best part of a decade. We had production growing quite strongly. But sales not quite keeping up. So it was building stocks, and real prices in particular came under quite a bit of pressure. The industry then implemented its WISE strategy, or the wine industry strategic exercise. And part of that was to focus more on markets, what the market wants, become more of a value-driven industry as opposed to just volume. So we saw production coming down, and that was a factor of two things. So firstly, the fact that area under wine was reducing, often replaced with things like fruit, which were more profitable. But then also we had the drought in the Western Cape, which is where the bulk of this sits, right? So production came down, stock levels improved or declined a little bit, which gave us a better market balance. We actually saw real prices increase a little bit for 2-3 years, and the industry was just coming back onto a solid footing. It was recovering from the drought, and 2020 was expecting quite a big increase year on year in production volumes. And then, of course, COVID-19 hit and the associated restrictions. So if we move on to 2020 then, what I'm showing on screen now is the results of that retrospective simulation that we did. So we've got in the bars, we're showing domestic consumption, exports, and ending stock just for 2020. And we're comparing the scenario, which was in actual fact the outcome that we saw. So that's the actual data for 2020, which is now available. And then the baseline, which is the alternative one that we simulated, where we account for the macroeconomic impacts of COVID, but we don't impose any restrictions on sales. And what we found was quite interesting. So if you look just at domestic consumption, there was a 15% difference between the two, so a 15% reduction as a result of the restrictions. If you compare that, for instance, to the period, so we had 14 weeks of outright ban on sales, which equates to about 27% of the year, which is obviously more than what we saw in actual consumption. And this is a question that we often grappled with when we did the forward-looking analysis. You know, to what extent does a consumer restock? At least your consumers that are able, to what extent do they restock once the market opens again? In terms of exports, we had a 10% reduction between the two scenarios. So as a result, that was just a 3-week period where exports were banned outrightly. So over that 5-week period of on and off, there were 3 weeks where exports were not able to take place, which is only about 6% of the year. So in this case, the impact was a little bit bigger. And that relates to factors that we mentioned. So if you don't deliver, you obviously get your reputational damage, but things like being delisted, loss of shelf space in retail, all of those factors takes much longer to remedy, and you can't just start them up again once exports can start to flow. The big one, of course, is stocks. So we actually saw a 40% odd increase in stock levels year on year. So stocks would have increased regardless. Given the weaker sales environment. But 22% higher your ending stocks under the actual data that occurred compared to what might have been if we hadn't imposed those restrictions. And this is important because this is what gives us, to some extent, also the lasting effect. So it's a big driver of what we see going forward. The chart I'm showing on screen now is the outlook for the industry. And that accounts for what actually happened in 2020. So it's based on actual data and the restrictions that we had to date. But it has no further restrictions imposed in 2021. So absolutely the outlook that you see is simply a result of the high stock levels that we're carrying, which tend to then push down prices. And because we've got this extended period of lower prices, it gives us quite a significant effect on the actual production value coming from the industry. If you look at those stock levels, it's clear in 2020, the big bump up. So that was a 44% increase in stock levels year on year. That builds further over the next few years, albeit slower. And then in the second half of the outlook, once production starts to respond stronger, then we see those stock levels actually declining. But by 2030, we're still sitting at a level that's slightly higher than what we had in 2018. So, of course, here, that's the other dynamic that we have to consider. We're working with a very long-term industry. So your producers don't have that many options to respond. Obviously, your vineyards, if they're in, they're in. So in the short term, we see some flattening of production, which is very much related to a strategy of pushing more sales into the non-alcoholic sector. And then over time, when we really see it coming down in the second half, that's where we start to see the impact of people not reinvesting in their vineyards under the current period. So, of course, you can pull them out and change to something else, but then you also need capital for that, which in a difficult financial environment then doesn't tend to occur. So this is the same as the previous one, that multi-year impact. We've just expressed it here in terms of production value. So I've noted those prices. Your production response is not massive in the short term because it's such a long-term industry. But the price effect is quite significant. So you can see there, if you look at the production value, and this is a very simple approach to it. It's simply valuing all production at bulk prices. So it doesn't account for further value add up to retail level. It doesn't account for the fact that exports are more expensive. And despite all that, if you look at the period from 2020 to 2027, we're looking at a 2.7 billion rand impact. And as I said, once you account for the additional value add, that the quantum of that gets much bigger. But the trends are similar. So I think important that we wanted to note here is that even under a baseline, we do have a flattening off and a decline in the short term before bumping up when the general environment in terms of the economy and buying power improves. And then also when your production starts to respond. But obviously in your scenario where the restrictions were imposed, we remain below that line for quite some time, and they actually only converge by 2027. Then we also did another one where you see very similar trend, but just a deeper decline in 2021. So this is just very much the same effort, but accounting for the 10 weeks of ban that we've already had this year. So once we put that in and we calculate the effect relative to what we simulated for 2020, we can impose that as well and account for it as well. And then that 2.7 at primary level bumps up to 3.6 over this period from 2020 to 2027. So just some closing thoughts, further possibilities, what else one could do. Obviously, this was a fairly simple analysis, but I think is quite powerful in terms of highlighting the longer term effects of the actions that we took now. It was very much focused on the primary industry, didn't account for the additional value add, which one can try to do. Also, there's other sectors that are related to this one. It's been noted in the comments, but things like wine tourism, for instance, we're not accounting for that. Within the modeling framework, we can express this in terms of retail and export sales value, which would give you a higher absolute impact, but the trends in the period of recovery would likely be similar. You can also take these price impacts and draw them through to margin analysis. So looking at a typical producer and what that would imply for his or her margins. You can link it to labor multipliers to get an employment impact of that lack of reinvestment. And then currently, I think an important point to make is we have no constraint on the stock levels, and it was quite clear how high they run up. There is a concern that we don't have the capacity to stock that much wine, that we're actually already very close to capacity. So under different scenarios, you can also play with that. If you do cap the level of stock holding, the prices do fall significantly further because we can't push more wine into stocks. And then, of course, going forward from here, the question is how do we recover and what actions can we take? And this modeling framework obviously is very useful in terms of looking at various options, looking at various interventions, and how we could possibly aid recovery in this important sector. Thank you.
Thank you very much for that, Dr. Tracy. Quite an insightful picture, I guess, of some of the responses that have come through from a farm or firm level in that value chain in response to some of the restrictions that have happened, but also, I guess, for the purposes of some of our students, also them drawing out some of the downstream implications of what this has meant. Seeing one comment here from Morite Makola, who's saying, he noticed how the effects go beyond just the farm gate and production and even the retail element, but also all of the other incidental services around the around the wine sector have also been affected rather significantly. And making mention of a photographer who gets his business from the wine and liquor sector, whose businesses have effectively been frozen during this moment. So we'll come back to some of those questions, but we'll now take the last of our presentations looking into the real economy. And Dr. Unathi Enama is a tourism professor at the Department of Tourism Management at TUT, the Tshwane University of Technology. And he's going to tell us all about, I guess, the impact on the tourism, hospitality and leisure sector, which has certainly been one of the hardest hit sectors by the restrictions on mobility that have come with the COVID-19 pandemic. Dr. Unathi,
thank you. They would share the screen on my behalf. Thank you. Ladies and gentlemen, the focus on today's topic would be on what happened to the tourism, leisure and hospitality industry, but I'll give a brief background. Next slide. South Africa is located at the bottom tip of the African continent, and the vast majority of tourists that come from South Africa come from the SADC region, which would be Namibia, Lesotho, Swaziland, and all of those other countries. But if you look, we're at the southern tip of the world. So a lot of these tourists that we want come from much higher up in the world. So it also means that we've got a geographic disadvantage. Next slide. The most prominent tourism event we've ever held in South Africa is obviously the 2010 FIFA World Cup, where a lot of tourists come to our country. And when people go all over the world, when you say South Africa, they speak about two things: Nelson Mandela and the World Cup. Next slide. And obviously, who can forget the exceptional vuvuzela, which was the symbol of this industry, about how it brought so many tourists, both from the African continent and from all over the world, to come to destination South Africa to come and to consume. Situation analysis. Where do we find ourselves? We find ourselves in an economy that is not growing. We find ourselves in an economy where so many small businesses are declining. And this is where basically the tourism industry plays such an important role. It is because that it has been able to grow when other sectors of the economy have not been able to grow. The next slide. And then when we speak about tourism, we always speak about the watershed moment, 1994. Nelson Mandela came out of prison. There were elections. The new South Africa was formed. That is what we define as the defining moment in tourism, because a lot of countries could not visit South Africa and South Africa could not visit other countries. So we became the Cinderella country for the first time. Next slide. Why tourism? Why is it so important? I mean, since 1994, tourism has grown far higher than any other economic sector in the country. I mean, in the year 2015, year-on-year growth of the tourism sector was basically 12.9, which is nearly 13%. South Africa, if you look, attracts on average 10 million international tourists per year. 1 in 23 people works in the tourism industry, and tourism has been called the new gold. Next slide. And the other two presenters, Dr. Tracy Davids and Wandile Sihlobo, will obviously speak about the linkages between agriculture and tourism, because as more tourists come, more demand for agricultural produce happens in the country, and then obviously the wine tourism in the Western Cape. If you look at the tourism industry, its direct impact on GDP would be 136 billion. Nearly 3% of the population GDP is by tourism. The amount spent by tourists in the year 2013 was 2189 billion rands. And then it is a far bigger employer than agriculture, because agriculture has been mechanizing. And if you look at this, what has been happening over the past several years, that domestic tourism has been declining in South Africa as a reflection of the poor and non-growing economy in South Africa. And that has actually been bad, because countries that have been able to recover their tourism industry in the post-COVID era have had the domestic industry as the crux of tourism recovery. Next slide. For example, just to give a broader indication, you find that how much tourists spend in the economy. You see also on that graph the average spend from the year 2013 up until the year 2013. The next slide. And then this graph, which is a bit murky, would obviously indicate, this infographic would indicate that obviously at the bottom, that 2.9, tourism contributes 2.9 of GDP. The direct number of employees in the tourism industry is 746, and then 1 in 22 people is employed within the tourism industry. So this industry has grown to become the new gold. And then one other reason that makes South Africa so attractive is that we have so many World Heritage sites, which makes us a must-visit destination. And each and every year, South Africans are always applying to ensure that more World Heritage sites are added to the list, which makes us a must-visit destination. Next slide. And then COVID happened. When COVID happened, one thing about the tourism industry, we are a travel-intensive industry. I cannot consume Cape Town in the comfort of my own home. I must travel. And when international borders were closed, the tourists could not travel. So nearly 70% to 90% of the tourism industry came to a standstill when COVID happened. Next slide. In the whole world economy, you find that what happened is that foreign arrivals dropped by 71%. You know, in the tourism industry in South Africa has attracted less than 5 million in the year 2020, which is very, very devastating. The COVID regulations impacted negatively on us, and the travel bans, even domestic travel bans had a negative impact, in addition to the alcohol bans, which had an impact on several sectors within the tourism industry, you know. And then if you look, most importantly, you find that there was more than 50% decline in tourism arrivals over a 15-year period, which showed this industry was hard hit. Next slide. But several good things have happened that we as the tourism industry can do. We have people that are working from home. And then when these people are working from home, they've got more time. So we should ensure that they take this extra time for tourism consumption. Number 2, Zoom towns. You know, people can work from anywhere in the world today. And then the development of Zoom towns, it's outside of the major cities. Smaller cities now are seeing growth where people are able to work from home. And then these cities now can attract visiting friends and relatives. We need obviously to vaccinate in order to open the tourism industry. Another trend is that business tourism has gone down because we are conversing over Zoom. So it's another opportunity for the hospitality and the meetings industry to change how it is. People are migrating to smaller towns and amenity-rich areas. And then there's been a big decrease in the price of tourism consumption. You know, your typical hotel now, you find that it might be 30% less. So it is now an opportunity to create new demand. You know, self-drive tourism, when people are driving their own cars, has grown. Domestic tourism has also become much bigger, you know, and then less popular destinations, the off-the-beaten track towns are also starting to attract tourists now. Nature is a big winner in the post-COVID era because people want open spaces, they want uncrowded areas, and then another issue. People have had lockdown fatigue. People want to travel because traveling is part and parcel of the habits. And also people have gone back to traveling. This is the new way of traveling. You must have a negative test before boarding a plane, and you have to do social distancing and all other non-pharmaceutical interventions. Next slide. What I can indicate is that the tourism industry is very much resilient. In as much as we've been impacted by the lockdown regulations and the pandemic, this industry will be able to pick up. But in order to do that, the most important thing is to ensure that our vaccination programs are in line with every other country in the world so that we are removed from red listing by major countries. I thank you.
Dr. Unati, thank you very much for those remarks. I mean, I like the Zoom Town, prospect, because it then might mean we might be able to work from many parts of our country. I mean, I can only imagine being able to work from a place like Hogsback or any of the other beautiful parts of our country that we have. So thank you very much for those remarks, Dr. Unathi Enama, a tourism professor at the Department of Tourism Management at TUT. Now, we're going to take a few questions, and it does seem a lot of the questions are for you, Jola. So a lot of questions sent to Mr. Sihlobo. But Dr. Davids, let me start off with a question for you from Melissa. And it says, very enlightening to see the long-term effects on the wine industry. What would you have advised policymakers to do to mitigate the impact of this while trying to prevent alcohol-related admissions from burdening the public healthcare system?
We just start off with the most difficult one right away. Yeah, I mean, it's a difficult one. So obviously there were reasons and well substantiated reasons for doing what they did. I guess stronger support if you are going to do that. So if you find the need that you need to stop sales, you need some form of safety net for your producers and manufacturers that then aren't able to take part in the economy. So maybe that's the short answer. Yeah, I think there's a lot that one can go into in terms of maybe handling different parts of the country differently, depending on extent of infection rates, hospitalizations, etc., in various parts of the country. But I would say the biggest one is that if that is a necessary requirement, then you need some form of support to help people to get through that period and to stay in business afterwards.
And Dr. Tracy, I'm going to sort of plead with you to help, because I think Wandile is going to get a few questions here that have come through. And Wandile, let's maybe start off with the first one here, coming through from Matthew Kensett. And it says, in your opinion, does food insecurity and malnourishment in South Africa reflect a lack of supply capacity, or does it rather reflect a lack of demand due to low incomes? So in short, is hunger a demand or supply matter, or both?
Yeah, thanks, Lasibe. I think it's the latter. I mean, the supply is there. And even if you were to look at South Africa's food prices relative to many countries in the world, not even only emerging world, South Africa's food prices are relatively at lower levels in that ranking. So it's the fact that fellow South Africans aren't as fortunate to have a bit of income. So that's the big issue. While Glasibe, I have a stage, I just want to add a little point to that question you had asked to Tracy, sure, because I do agree with Tracy's response. And in my view, I actually think that in the 1.2 billion rands that the Department of Agriculture, Land Reform and Rural Development placed on as a support measure in response to COVID, and having given it to relatively small farmers and stuff, perhaps we could have used that to target the wine industry, because it was the one that was hardest hit by COVID relative to some of our colleagues in agriculture. Because, I mean, if you were to dive deep down and say, okay, let's show the impact in those that have benefited, I doubt the evidence would pretty much point that the targeting was done well. So, yeah, thanks.
Okay. Now, a follow-up question on that, Jola, coming through from Perlim Teto, asking what the connection was with the fruit and vegetable hawkers and the lockdowns. I would argue, I mean, I guess that's also both an upstream issue in terms of the production side, but also in terms of the trade, where effectively many of the public spaces where fruit and vegetable hawkers operate were effectively closed to them as spaces where they could operate. Some of your thoughts on that?
Yeah, I think you've captured, I mean, fairly well, and this draws to a number of your work also in the informal economy space, about how the businesses there really fairly operate. And I mean, the reality is that many of the fellow South Africans goes to the fresh produce markets, buy the stuff, put it on the bucket, traders, and also go out and sell in various places. But I think the other thing I would add there, Glasibe, is that the limited movement of people going to work and all of these places also that had an impact, because no one is picking an apple or something on the way to the train or to taxi. So that was also an issue to an extent on the demand side.
Yeah, no, definitely. I mean, I think there's, certainly from my reading, two elements to it. The one is on the supply side, where many, fruit and vegetable hawkers are either sourcing from local sort of municipal markets or even from the mainstream food system. And some of the restrictions there have had a knock-on impact on them. But I think the bigger impact is what you've just mentioned, which is the restrictions on mobility, because we know many fruit and vegetable hawkers co-locate close to transport nodes, to high streets, densified areas in many of our townships and village areas. And I think the restrictions on those spaces, on the movement of minibus, taxis, buses, and the like, has had a massive impact. And then you can also add, I guess, some of the job losses in critical, low wage, low productivity sectors that have also reduced the wallet size of many a household that would be buying from those hawkers. I've also got one question here in my back pocket for you, Dr. Unati, and I'm going to come back with that question. I guess it's more of a technology related question as well. But Wandile, let's conclude maybe on this one for you. And it comes through from Dizanguna, who says, in your opinion, what changes can we expect to see in the agricultural sector should South Africa properly enter the digital revolution?
Sure. That's a tough one, and I'm going to invite
shop students.
Shop student. And I'm going to invite my colleague, Tracy, with your permission, to also opine on this. I mean, as far as a digital space within the agricultural sector, I think we see the increase at this point where I think it's going to cause also some massive transformation within the marketing space. I mean, there are exciting companies that we see popping out in South Africa, such as, for example, Kula, which offers this platform for farmers now aggregating the consumers and the farmers and really providing some of the marketing platform that didn't exist in the past. So there's that one angle, which is going to be part of it. But I think it also increases the value, because we now at a space where consumers want to know what are they eating, where was it produced, under what conditions. And now with technology, you are able to improve that traceability space onto that. And perhaps on the closing space, I mean, technology has been at the core of productivity in South Africa's agricultural sector. You look at the productivity levels here compared with many other African countries, you will see that we are far in line with Brazil and the others. But on the back end of that is technology, both mechanical stuff, but also biological stuff that we do apply. And I think that will continue to enhance us. Maybe, Tracy, you have ideas on this. I know you're studying these things closely for a while.
Tracy?
Thanks, Wandile. Yeah, I think you've mentioned many of them. I mean, I think in a sense, the period that we've been through with COVID also accelerated some of that. I mean, if we see just the increase in online sales, for instance, at retail level, things like animal auctions going digital, many of them having to do so in that period when crowds were not allowed. So it's in a sense pushed it a little bit, but these are things that could stay. If these are factors that made a big difference. I think in terms of production practices, productivity, in terms of using technology to improve your production systems and to do it more efficiently, but also in terms of resource utilization, things like using water more effectively. Will have a massive impact in South Africa. We've seen that already in some areas, but if we, resources where we're constrained, if technology can help us to use those more efficiently, we can do so much more, particularly in these high value intensive, labor intensive sectors.
Yeah. Dr. Tracy, maybe stay on there for a second, because there's a quick question coming through from Dimakatso Mkwanazi. And the question is, how has the supply constraints in the wine sector translated into, pushing up costs and increasing consumer prices, if at all, in particular in the wine industry and I guess broadly in agriculture?
Yeah, I think, in that period that we saw where production actually declined, the pre-lockdown period that I mentioned, we did see prices increase a little bit. But I think, that's also necessary over time, given that production costs are increasing all the time, etc. I think what we're currently seeing, with the stock building, with production actually increasing and markets not being that strong, we've seen prices come under pressure, and probably will remain so. So I think more pressure on prices in the wine sector, in particularly at the moment, rather than the other way around.
We also have a follow-up, one dealer, and I think this one's for you, from Perlim Teto, and she's asking, I guess as a follow-up to the question on the hawks, whether the models that you looked at accounted for the fact that this sector is largely manned by female heads of households, and what other forms of technology could have been used to collect, I guess, or to even support them, such as WhatsApp. Quite a difficult question there, Perlim. And then I think the other one that you might also want to respond to, from Sherilyn Salmon, saying, I see the emergence of new digital fresh produce trading platforms in South Africa. How do we make sure these innovations protect and grow small-scale producers and their prices and the margins that they enjoy?
Yeah, the students are keeping me sweating. I'm an old man.
Yeah, on the money. They are on the money.
I think on the first one, Plasibe, from Perli, the issue there is on the point that you alluded to at the start, because it was not only the constraints on supply on bringing in there, but people also didn't have the income. You also had a demand issue. You go to a number of townships, and you speak to folks, and doing a range of surveys that many of us were doing, you realize that the household's income were in a tragic situation. And I think, which is why, you look at the government support that was given to people, as well as the food parcels. If you saw the demand and many people were rushing for those, it was speaking to that lack of income. So you could have a WhatsApp and say the oranges and spinach is available at a certain place, but folks were just in an unfortunate situation. So that was the big issue there, which I think, Penny, I forgot to ask the second question, which was asking about how do we ensure that smallholder farmers are not alienated in the process of bringing in technology. I think actually new technologies that are coming up specifically for some of the startups are largely aimed on taking care of that market of smallholder farmers, because most of the guys that are in the commercial space are already taken care by established companies. Now we have young people who are looking there and saying, what's up with these smallholder farmers? Why aren't they developing? What are the issues? What can we do on providing solutions? And I think they will take them through a journey. What you will begin to see in the coming years, I anticipate, is more of a commercialization, both in the business, in a model of farming in the relatively small to medium scale farming, but also consolidation that would happen there. Because if I do well in 2 hectares and my neighbor has another hectare that is not using, and I have this marketing platform and I get this income, I think people will aggregate and do that sort of thing. So that's what you will see, I think so, in the coming years. Thanks.
Sure. Okay. Thanks for that. Dr. Enama, I've got a few questions here as well for you. And the first one comes from Melissa Mve. And she says she really liked your suggestions on alternative forms of tourism income. But I guess this is the question. Will local tourism income be able to make up for the loss in international tourist arrivals and some of the income that's been associated with that?
There's no right or wrong answer. As a country, to have a sustainable tourism industry, we must have the bedrock as domestic tourism. That's how China was able to recover from the pandemic. Even though the country was closed, they were able to travel within the country. So, but remember, domestic tourism is a function of the economy, and our economy has not been growing very well. So it makes us dependent on these international tourists. So as we want domestic tourism to come up, we also want international tourism to come up also. But I do agree, because of the pandemic, people are much more safe with their money. You don't need to go on holiday. And there's this big saying, South Africans don't have money. I agree they don't have money, but South Africans are saving. The COVID was a very important opportunity for the tourism industry to have a serious look at itself and say, are we clearly in line and aware that we stay in South Africa? There is R1 billion stokvel economy that we have in South Africa. And the tourism industry is not speaking to that sector. And these people have got money. Let me give you an example, Ayabonga, and to every other people here. I know of people who are in Stokvels. Once or twice a year, they must have a meeting. Why don't we, as the hotel industry, say, why don't you save 100 rands more? Why don't you save 300 rands more? And here's a package. Come have your meeting, but you can sleep over. Here are the activities that you guys can start to participate in. By so doing, we are introducing people who might not be typical tourists into the tourism industry. So if these people are saving so many billions and we're not talking to them, then I think it's a big travesty. And we have to once again look at ourselves and say, are we sure that we are in South Africa? Because if we are in South Africa, then we have to speak to that economy.
Yeah, and I like that because even how we communicate around short left and encouraging domestic tourism, inbound tourism, it doesn't speak, I mean, in that type of language. And we can also have a discussion around the types of tourism products, and I guess how those speak to particular types of audiences. Let's take the second question for you there. It's from Morita Makola, and Morita is asking there, how can the tourism budgets support to reduce the burden of costs? So this is around the sort of the cost competitiveness of South Africa in relation to other tourism destinations. And he says tourism and travel are quite tricky during a pandemic because you have to pay for PCR tests, which is like 850 Rand. You have to make sure you cover your quarantine costs. It might be at a hotel somewhere. So how do we make sure that we at least are able to shoulder some of those costs to improve the cost competitiveness of our tourism sector during this difficult moment where there's quite a bit that goes into planning a trip, least of all, a trip from one country to next?
The tourism industry has changed forever. The tourism industry changed forever. If we want to make South Africa much more competitive, I think the first thing we must do is we need to look at government regulations that have a negative impact on tourism. I think that's the first thing. Because if I'm in London and I want to come to, I'm choosing destinations, Thailand, South Africa, Kenya, I might choose those other two destinations because the flights to South Africa are more expensive. And this is because of regulations within our country. For example, in South Africa, to operate a domestic airline, the regulations say the airline must be 75% owned by South Africans. I think that regulation has got no place in today's society because to travel just within South Africa by air outside of Johannesburg, Cape Town, and Durban is very, very expensive. I mean, for example, if today you book a flight to PE, I mean, it would come. It will become like nearly a flight going overseas. You see what I'm saying? So let's look at government regulations within the transportation. Let's improve our visa system. Let's ensure it's paperless and it's easy. There are countries that we've got a lot of trade relations with, like China. Chinese, when they come to South Africa, they need a visa. We do not need that. I mean, for example, Nigeria is one country that loves visiting our country. They're already outspending a lot of foreigners, even Cameroon. But people from Cameroon and Nigeria, they require a visa to come here, whereas their neighboring country, it does not require them to have a visa, which is Ghana. So if you look at transportation, we look at the visa system and a lot of also regulations within the Department of Transportation. And again, the most important aspect, safety. South Africans must be safe in their houses. South Africans must be safe. Safety must become a dividend that each and every South African can enjoy. And if South Africans can enjoy that safety dividend, then the tourists will naturally come. We always say in tourism, if the towns and cities are good enough for the residents to stay there, the tourists will naturally come. But I'm not going to be part of people that say we must make tourists safe and not make residents safe. I'm not going to be part of that. So if we look at these three aspects, I think we'll be on the right path. When we speak again on how can South Africa shoulder some of the costs. I don't think South Africa has got a big tourism budget to be able to do that. And I think it reflects the entire trajectory on the African country and also on a lot of developing countries. Just to give you an indication, Zimbabwe has already began vaccine tourism, where if your country has got maybe a slow vaccination program, you can go to Zimbabwe around the Big Falls area and get vaccinated, of which you pay a cost if you're a foreigner. And that has also led to this new development of this vaccine tourism, even though there are obviously pros and cons about it, but it is happening. So, but I think South Africa, if it wants to grow, address your three fundamental issues. And that also means we have to encourage all South Africans to vaccinate, to ensure that we can get this herd immunity so that countries can remove us from distancing. South Africa is once again a country we can come and visit and come and enjoy this beautiful land. Because let's be honest, we have one of the most beautiful countries in the whole world, but that is not enough. We have to make it pleasant for people to come here. It must be enjoyable when people come here. And when people don't come on holiday, they don't need to worry about safety. They are coming here to enjoy themselves, because tourism consumption is a big thank you that a person gives to themselves. So that's why when tourists go overseas, they want to only come back with good memories. So we must ensure that even how we service our tourists, we are very, very serious about customer service to ensure that they come to our country, consume our beautiful culture and beautiful landscapes, and go back to become people who become ambassadors about how great a tourism experience we have in South Africa.
Sure. Let me ask you a last one, and I might maybe come back with another question, I guess, on how we diversify the supply side when it comes to tourism products. But another question here from Morita saying, how can the long distance travel sector be revived? Greyhound is closed down. Airlines need support. There are more commercial, for example, there are, I think, no more commercial flights to anywhere in Limpopo. Polokwane Airport lost its license, and there's fewer flights from hubs like Cape Town and Johannesburg. And I think many of the other regional airports are also facing similar challenges. Many of those that fall outside of AXA in some cases. Some of your thoughts on that as well?
Yes, not only that, Plettenberg Bay just last week was downgraded. So, Cam Air, which flies to Plettenberg Bay, was also put on hold. Here, once again, this requires, the tourism white paper is very clear. We need an enabling environment to be created by the state for tourism to succeed. And we obviously require better collaboration between the private sector and the public sector for the tourism industry to properly gel. In the issue of airports, I think it is in the best interest of South Africa for connectivity, because connectivity is not just good for tourism, it's good for agriculture, it's good for exports, wine exports, because we're able to have fast-moving transportation. We obviously require the active participation of local municipalities, which sometimes own some of these airports, for them to engage on a strategic partnership, either with Airports Company of South Africa, or also contract other maybe private individuals that can assist them to ensure that they meet the right safety standards from an aviation perspective. I think if we can achieve that, then that will be good for local economic development. And once again, the issue in South Africa from a business perspective is red tape. We have to be very, very focusing on what are the red tapes that we need to reduce. That will make it easier for people to start businesses and for people to once again travel. But on the flip side, it does not mean that the minibus taxi industry has stopped to operate. It is actually growing at a very, very fast pace. South Africa right now has a new e-hailing operator called DD from China. So in as much as maybe there might be a loss of your bigger bus companies, but the less attractive operators of transportation are still there. And then these people might be going to the rural hinterlands of Lubuahom in Limpopo. They might be going to the rural hinterlands of Tatevondo in Limpopo, or going to places in the Eastern Cape in the Northwest. And they use these other transportation means, which to us might not be something that we choose. But they remain domestic tourists. But what do I do when I arrive in Rustenburg? I don't have information or a pamphlet that says 10 things to do in Rustenburg, 10 things to do when I'm in Kronstadt, 10 things to do when I'm in Middelburg. So once again, that remains the responsibility of local economic unit within a municipality. But increasingly, tourism role players are taking this road and say, we're not going to wait for government, we're going to do this on ourselves. So I also encourage tourism associations to say, these are the top 10 things to do on the Wild Coast. Let us start giving people this information. And in the era of social media, we have young people that are with their phones all the time. Let us put all of these beautiful, I call it a National Geographic sign, for lack of a better word, where you can sit and take pics. It will say Clarence, it will say a V&A waterfront. Let's put those up. And then let's allow these people to take pictures there. And obviously, when you arrive in a town, okay, we take a picture there. And then it obviously increases the appeal and the visibility of a town.
Maybe a last one from my end. How do we diversify the supply side? So the types of tourism products that we're talking about. I mean, one of the areas that I'm quite interested in is this idea of heritage tourism, because I think we don't do as good a job as we could in trying to attract, least of all in our province. You would know, province, legends. Some of the issues there. So some of your thoughts on that, because in a way, it is about also taking tourists off the beaten track. It's not about taking them just to the coastline or to the different urban hubs that many people are familiar with, but also taking them to some of the beautiful parts in the hinterland of our country that might not have been positioned as, I guess, a prominent tourism product.
The post-apartheid heritage development has had a few successes, but also a few mistakes that they've made. I'm happy that we've got a new Minister of Tourism who she is a big political player, because tourism has not been on the table when heritage sites are developed, because heritage sites have to consider the new client today who's technologically savvy, who needs not to be told about the experience, but to press a button to have this beautiful audiovisual experience that will immerse them to a free Wi-Fi on site. So the majority of heritage sites created by government have not meant that, because you don't just create a heritage site, you must do precinct development. You see what I'm saying? I think one of the best examples of heritage sites is the privately owned Lily's Leaf. There's a restaurant on site, it is clean, everything's excellent. They integrate technology into the whole experience. That is completely different when you go to, I was recently in Bloemfontein, when you go to Vryhoek, which is where the ANC was formed, which is a museum, but it is hollow and insignificant because there's nothing inside. Just as like the house of Mama Winnie Mandela in Brandfort, it is revamped, but there's nothing inside. So we have to understand that we need to create a precinct. What do I mean by precinct? Let me just bring it down. There must be an ATM. There must be a coffee shop. You see, there must be a coffee shop, so that if I don't have money, the only one, I must be able to withdraw money there. So there must be activities around so that we are able to make the tourists to reduce the speed by which they leave the place. Woolworths does it very well. Woolworths has now its own restaurants inside, so that you must spend all the money at Woolworths. You see what I'm saying? So precinct development is therefore important, but we cannot give up on our heritage sites. They are too important, because when tourists come, after they've seen the big five, after they've seen our beautiful scenery, they want to learn about us, and we must also understand the most unfanciest places are the places we must take them to. Every day I post on social media what I call #lockdown destinations. And the place today I presented was Mai, which is an African traditional medicine hub in the city of Johannesburg. So we must reflect what we are. We must not sanitize our heritage. We must not sanitize our history. We also need to develop places such as Marikana and say, let's develop Marikana to become a heritage site, so that if I'm going to Sun City, there can be a new attraction that I go to and see.
Dr. Enama, thank you very much. I think even many of the reflections in the Q&A are very grateful for the inputs that you've given us. And I want us maybe just as we conclude to do this, Wandile, Dr. Tracy, and Dr. Unathi. And we'll start off with you, Dr. Tracy. Give us maybe, certainly from your reflections, and it might be in the wine industry for you, agriculture, Wandile, but also tourism, Dr. Unathi, some of the things you've touched on, that you think would be catalytic, that would be able to unlock subsequent first round, second round, third order, impacts that can be able really in the real economy, not only for us to recover, but as we build forward to do so on a much better basis. Dr. Tracy, I'll start off with you. And I know I put you on the spot here. So
yeah, maybe I'll given that you put me on the spot, I'll go a bit wider than just the wine industry, but maybe agriculture more broadly. Sure. I think there's a number of factors, but maybe to highlight three, maybe we start with logistics. I think for wine and fruit, many of the agricultural sectors, Wandile mentioned it, being a net exporter, being able to move product efficiently through our ports and out into the international market is very, very important. And I think some of our ports have come under pressure already before COVID, but I think the last 2 years has shown us a lot of bottlenecks there in terms of port efficiency. If you think of things like the report from the World Bank that came out recently, we can be a lot more efficient there. And I think investment into infrastructure in those ports is critical for the future to really grow these export-led industries. With that goes markets. I think we have to position ourselves. We have to be competitive. We have to be able to compete in the global market. We need to get these products out efficiently, but then also have competitive access into growing markets internationally. And then maybe the last one is something that we haven't talked much about today, is we haven't really ventured into livestock. I think Wandile mentioned it briefly, but we have a lot of opportunities there for growth. And I think, something like animal health is something that we can improve a lot on, that can really unlock a lot of inclusive growth for us going forward.
Awesome. Thank you so very much for that, Dr. Davids. Wandile.
Take an easy answer and say all of the above.
No, this is not a multiple choice discussion.
I have about 5 quick points that I think would be fundamental for agriculture as 3. Oh, thank you.
3.
The first quick
Let's
one.
Let's prioritize 3. Yeah.
Priorities, not like South Africa, many priorities. Quick one. It will be financing. We need to deal with better and more instruments to be able to finance agricultural sector. And I think one of the quick thing, it might be the fact that many of the people that are sitting in the financial services are unable to pretty much assess the risk of agriculture, because I still think that we're not seeing new players coming into the sector. That's the first point. And the second point I would deal with, it would actually emphasize what Tracy has mentioned on infrastructure, because what we are seeing now, you have, like I was saying, roughly half of what you produce going to export markets. But if you drive around South Africa, there's already a major expansion across all more major subsectors. Take citrus. The guys are expecting roughly 40% growth within the next 30 years. So logistics needs to be up to stretch to deal with that. The other issue that I would say needs to be dealt with is the issue of security. There's a lot of stock theft, especially in areas where I come from in Transkei, that puts small farmers in a very difficult situations. But in the in the major commercial farming entities, there's a lot of farmer tax, farm vandalization of infrastructure. Those are things, and I think they hit also on Dr. Unathi's space on ensuring that the security is there. So those will be the key thing: financing, infrastructure, as well as security. I would say 3 major things to be addressed.
Sure. Dr. Enama, on your end, similarly, and I like, the point Wandile was making. Class City 3, at least, we prioritize. In South Africa, we love 10-point plans or 10-point priorities. Now, the moment you get to 6,
okay, I Okay, I think the first one, the most important one, I think it's safety. It's safety. Number two is to ensure that the vaccine, we're vaccinated, then we can be open as an economy. And thirdly, if we'd allowed the private sector to procure the vaccine, then our world-class healthcare system, which is in the private healthcare system, would be able to benefit from vaccine tourism. I think Israel is already doing that. Russia is already doing that. And South Africa is already a major medical tourism destination, especially for a lot of Africans that will just come here, and also a lot of Europeans, because their prices here, including their return flight, is much cheaper here. But again, just to also add on what Tracy and Wandile have said, I think also the road infrastructure is a major issue that impacts on the farming community, because I mean it's very, very bad, especially in the rural areas. So let's ensure that the road infrastructure is okay. It's especially the potholes, because tourists always find, well, what are potholes, so we do not want that. And lastly, Tracy, I think sometimes to grow the domestic consumption of wine, we need to stop making wine snobbish. We must stop making wine sophisticated. I think maybe we should take a whole bunch of you whining executives and just go take you into a taxi rank for like a whole week, so that maybe we see how we can make wine less sophisticated, and be able to ensure that the bulk of the population start to consume wine, because we've got great wine. So we don't want people overseas to consume our wine, whereas there's a market maybe we've not tapped into. And that also starts with communication, But I think it's too sophisticated. But maybe we should talk about that later.
Yeah. That's an interesting one there, Dr. Enama, because I saw one of the wine producers, they've started to can their production, because, in South Africa, it's only the bottle or the box. And I found it quite interesting that, there's also some jobs in downstream industry, in the steel fabrication sector that might come through there. But I think, Dr. Tracy, the challenge is there. I mean, let's go and see if we can't go to Bree taxi rank. Although I must say, Dr. Enama, I would think there are many people who are already consuming the boxed variety. So I don't know if it's that snobbish. Dr. Tracy, you want to respond to that?
Yeah, I think,
take up the challenge.
It's I'm not a wine producer myself, unfortunately. Valid point. I think expanding the consumer base is a big is a very valid strategy. Obviously, you have strong competition from something like beer there. So, but I think the wine industry, what they are quite good at is marketing at different price points, different products. There's a wide range of products available, and I think you should push hard on the marketing across all of those.
Yeah, I'm sure there's more than enough boxed variety and late harvest to go around, and maybe we might also get some of the other varieties on the upper end into those markets as well. Wandile, Tracy, and Unathi, thank you to the trio for your great inputs this morning. I can assure you, certainly from the comments I'm getting here, that they've been very well appreciated. Many people saying great presentations, great engagement. Those presentations will be available on the Gtac site. And I think they'll certainly be an invaluable resource for many of us who are on this call. So we're going to have to pause here for a second. We're going to take a brief break. We'll be back again at 11:15. So just a brief comfort break, go grab a cup of coffee, go get some fresh air, and then we'll be back again for our next discussion. But a big thank you, Dr. Tracy, Dr. Unathi, and thank you very much to all of you for this great discussion. Oh, and yes, please don't forget to fill out the polls, please.